So Joseph, the year has just started.
Yeah.
Equities are turbulent, everybody's panicking, but you wrote about how, and I don't think you're alone in this, that REITs have been doing well. You know, REITs are one of those asset classes I think you forget about until it becomes popular again, because it's just there, right? So the bunch of people you spoke to did say that REITs were having a pretty good year. Why were they actually performing pretty well?
I would say the largest contributing factor in the great performance, I would say attractive performance of REITs is mainly due to the low interest rate environment.
Yeah.
And so in 2019, the US Fed rate has been cut 3 times. So in that case, bond yields are dropping, FD rates are dropping. In that case, REITs distribution yields seem more and more attractive. So that's why people actually venture into REITs instead. So that's the main reason, because of the distribution yields provided by REITs, but also because of a low interest rate environment results in cheaper lending, cheaper loans. So REITs can actually acquire more loans to finance property acquisitions, etc. So I guess those two are the main contributing factors.
The good thing about that is talking about low rates. I mean, Bank Negara just suddenly surprised, right? Cut their rate, and I suppose that sort of fueled the positive interest in REITs. But the guys you all spoke to, what did they say about this year in terms of like outlook? Because I don't think it's going to get any easier, but the bunch seem to be pretty, I won't say overly positive, but they seem to have faith in this asset class.
I cannot really speak on their behalf, but Jason Chong from Manulife did mention that he doesn't really expect an interest rate cut because there are 3 interest rate cuts in 2019. He didn't expect the same thing happening here this year. He only expects 1 interest rate cut. But then things have changed with the new novel coronavirus. So maybe there might be more future rate cuts, and we might never know. So the future is kind of uncertain. But during the date of publication, they are optimistic because interest rate is still low. But as to is it going to cut as much as 2019, that remains a question mark until now.
But what do they see aside from the low rates being positive factors? Because there must be other things that sort of give them at least a bit more hope.
I would say it's kind of like been repeated over and over again, but I would say 5G technology, the advancement is a big, huge push factor for REITs, because when 5G, they need a lot of base stations to set up the infrastructure.
Right.
Yeah, so a lot of these properties can rent out their rooftops for these base stations, for these telco companies to actually set up their infrastructure. So this is an additional income source for these REITs. So I would say base stations are another revenue stream for REITs, and it could contribute into the earnings, which reflect in distribution yields.
But speaking about investment in REITs, and here we have to make it clear, you can invest in the REITs themselves, the KLCCs, the pavilions, but you can also invest in REIT funds, which is a collection of REITs, specifically the Inception style, right? So it's a basket of a basket. And the good thing about a fund is it's not limited to Malaysia. So one of the guys you said look at funds too. I mean, what's the advantage of a fund versus like just buying KLCC straight?
I would say the advantages of investing in the funds is pretty much the same for most equity funds. I mean,
that are in this kind of basket.
Yes, there are like diversification is a huge factor. So during the Hong Kong protests, Hong Kong is quite a huge hotspot for REITs. But ever since the protests happened, it has dropped by around 10 to 20%. So if you have all your baskets inside Hong Kong REITs, you're gonna have a hard time. So diversification is a huge factor across sectors, across regions, across location, to minimize your risk. But I would say the biggest factor will be active management, because these properties are backed by tenancy agreements, and tenancy agreements change, renews every for commercial properties, for example, they renew every 2 to 3 years. For logistics or for manufacturing companies, it might take 10 years. So let's say if the rental rate has actually gone up, let's say in Singapore, for example, the property rental prices have gone up. So when they renew their rates, their earnings have also increased as well.
Yeah, correct.
So what these fund managers do is actually monitor the tenancy agreements to see when they expire, to actually check out the rental rates within the region. So if, for example, Singapore, their rental rates have increased by 10%, means they expect their earnings to increase by 10%. So maybe they just buy more into the REITs beforehand, before the hike up in the rental rates. So the active management, this kind of foresight is quite valuable for REIT funds actually.
So funds or buying straight, which one's better?
It really depends. Depends on your risk profile, it depends on your investment goals. I mean, for people who are much more stable, maybe retirees, they want some stable income. REIT funds should be should diversify the risks across the board. But if you are a much more aggressive person and you are much more passionate about a certain sector, maybe healthcare, within this current environment.
More specific, correct? Yeah.
Yeah. So maybe you want to put more of your allocation into healthcare REITs instead. Who knows? It depends on your goals, actually.
For more on the stories, pick up a copy of The Edge Weekly at all good newsstands.